Welcome to the front lines of the Silicon War. While most investors are chasing software ghosts, the real power is shifting to the microscopic armorers of the 5 nanometers era. Today we're dissecting Chengdu Ultra Pure Applied Materials, or UPAM. This isn't just an earnings call, it's a blueprint for how a domestic underdog is weaponizing import substitution. If the 5 nanometers node is the holy grail of modern computing, UPAM is the one manufacturing the indestructible chalice. Think of it as the quiet professional in a room full of loud tech giants, silent, specialized, and currently indispensable. Let's look at the vertical takeoff phase. UPAM isn't just growing, it's experiencing a 71.25% revenue CAGR. In consulting terms, that's a structural breakout. In reality, it's like watching a high-speed train skip the station and head straight for orbit. They've maintained a 59% gross margin in a sector where others are price-warring themselves into extinction. This financial moat is built on one simple truth. When you're the only one who can make a 5 nanometers focus ring that doesn't melt under plasma, you don't ask for a price, you dictate it. It's the business equivalent of being the only person with a key in a room full of locked safes. Follow the money. $23 million to $69 million in 24 months. That's a 3x surge fueled by a literal fab frenzy. Their revenue mix is now 95% specialized coating parts. They've pivoted from being a generalist to a precision sniper. Notice the operating cash flow tracking the net profit almost perfectly. In an industry known for paper profits and phantom receivables, UPAM's cash is as real as a McKinsey invoice. They aren't just selling parts, they are harvesting the dividends of China's equipment localization. It's like owning the only gas station on a brand new highway. You don't need to advertise, you just need to keep the pumps running. This is where the magic and the physics happens. Inside an etching chamber, the environment is more hostile than the surface of Venus. UPAM's shower heads and focus rings are the only thing standing between a 5 nanometers wafer and total annihilation. We're talking about surface engineering where a single speck of dust is a mountain, and these guys are the mountain movers. If the etching tool is the brain of the fab, these components are the immune system. Without them, the yield drops to zero, and billions of dollars in R&D become high-tech paperweights. It's ultra-high-precision alchemy, disguised as manufacturing. Now, the elephant in the room. 90% of revenue comes from just a handful of giants. In traditional consulting, this is a red flag. In the semiconductor localization race, it's a fast track. Being locked into customer A and B isn't a vulnerability, it's a symbiotic marriage. The certification cycle takes 2 years. Once you're in, you're part of the DNA. It's a dual-edged sword, but for now, both edges are cutting through the competition. It's high beta, high reward, like being the exclusive oxygen supplier for a mountain climbing team. If they go up, you soar. Let's talk porosity. While the industry is stuck with atmospheric plasma spraying, which is basically like trying to paint with a sponge, UPAM uses PVD. Their porosity is less than 0.01%. To put that in perspective, finding a hole in their coating is harder than finding a humble consultant. This level of purity is what prevents trace element contamination in 5 nanometers chips. It's the difference between a sieve and a diamond wall. This trade secret know-how is the real moat. You can't just buy the machines and copy the result. It's the secret sauce in the silicon kitchen. UPAM is the big fish in a small but rapidly expanding pond. They hold 5.7% of the domestic market, ranking number 1 among local players. Yes, the global giants like Comico still dominate, but the localization tide is rising. Every percentage point UPAM takes from a foreign incumbent is worth millions in pure margin. They are the local hero fighting the global boss, and they have the home court advantage of supply chain security. It's not just a market share battle, it's a sovereignty race. 99.99% capacity utilization. That's not a typo. The machines in Chengdu aren't just working, they're sweating. They are literally running out of floor space to print money. This is why the IPO is a critical path move. They need the Mishan and Chengdu expansions like a marathon runner needs water. They are currently bottlenecked by success, a problem most CEOs would give their left kidney to have. When your utilization is this high, every new factory you build is essentially pre-sold to a hungry market. The Chai brothers represent 50 years of collective technical heritage. This isn't a finance bro startup, it's a founder-engineer fortress. They control 68% of the voting rights, ensuring that short-term quarterly noise doesn't derail long-term R&D. In a world of job-hopping executives, This level of stability is a premium asset. They've lived through vacuum physics and optical engineering since before the internet was a thing. They aren't just managing a company, they're legacy building. It's old-school expertise meeting new-age demand. Where is the $156 million going? It's a four-way split to unlock the next level. $48 million for optics, $44 million for 5nm surface treatment. This isn't maintenance CapEx, it's expansionary firepower. They are building the infrastructure to transition from a component supplier to a strategic partner for the entire lithography and etching ecosystem. This capital isn't just buying lathes and coatings, it's buying the future market share of 2029. It's the ultimate double down on China's fab expansion. The 7.1% localization rate is the most important number in this deck. It means 92% of the market is still up for grabs. In a world of decoupling, being the 7% that is safe and local makes you the most valuable player in the supply chain. The white space here isn't a void, it's a gold mine. As fabs shift from just-in-time to just-in-case, UPAM becomes the insurance policy for the entire industry. They aren't just riding a trend, they are the trend. We've seen the numbers. Now let's look at the chess moves. Strategy is about where you don't play as much as where you do. UPAM is focusing on the vertical moat, from the atomic level of the raw powder to the sub-3nm node requirements of the future. The roadmap is clear. Dominate the surface, then own the system. The three pillars: process, product, and integrity. Evolving to 3nm is the technical North Star. Moving into lithography is the horizontal expansion. And vertical integration into raw materials is the supply chain fortress. If they pull this off, they won't just be a supplier, they'll be the standard. It's about moving from made in China to engineered by UPAM. This is the McKinsey 3 Horizons model in action, happening in real time. Bottom line, UPAM is a high-growth, high-margin localization powerhouse sitting at the intersection of physics and geopolitics. They have the technical know-how, the customer lock-in, and now the IPO fuel to scale. The 5nm supercycle is just beginning, and UPAM is perfectly positioned to capture the outsized value. It's a buy on the future of supply chain autonomy. In the grand game of semiconductors, they might not be the king, but they are certainly the most powerful rook on the board. That's our deep dive into the 5nm localization play. The data is clear, but the execution is where the alpha lies. If you want the full-page sector report or custom research on the China semiconductor ecosystem, drop us a line at sales@HDINresearch.com. Don't forget to comment with your thoughts on the 7% localization gap. Is it an opportunity or a trap? Follow at HDIN230 for more high-level insights. Stay sharp, stay focused, and we'll see you in the next deep dive.